Welcome back to my channel. Today I'm going to be talking about smart money concepts, why I stopped trading smart money concepts, how I came to the conclusion of starting to weed out smart money concepts, why I don't think it has an edge in the market like it used to have like 2-3 years ago, and how I actually trade now. So for those that don't know, I started trading smart money concepts in 2020. I started through several groups, I took many courses, and I was trying to find something that worked in the smart money world. And I actually found that it was quite profitable at the time. 2020, it was still new-ish. And smart money concepts was kind of this really exciting way to trade because previous to that, I was trading based on like an Asia high and low strategy where, a 1 to 2 or a 1 to 3 trade was the average. And then I'm seeing people catching these 1 to 20s, 1 to 30s. I'm like, what is going on? There has to be something I'm missing here. How are these people catching 1 to 20 trades? I've seen 1 to 100 trades and stuff like that. I'm like, I need to learn this. So I made the transition in 2020 to smart money concepts. And to be honest with you, I picked it up quite quickly because it was very simple, right? Price comes in, bullish break of structure, enter a buy at the last point of interest or demand zone, too easy. But what happens over the several years after that was a lot of things started to change. Now, when I say too easy, it was very profitable in 2020. And it felt like if you had a 15-minute bullish range, price came in and did a 1-minute break, it felt like every trade at least had a reaction from that last point of interest. So you could almost go break even or take some partials nearly every trade. I knew people that had like an 80% win rate trading smart money concepts. What happened after that was that it became very mainstream. It was still profitable to an extent for me, and it continued to be for several years. But the problem that I faced was that there was diminishing profitability. And now we can see in the markets that there's actually ways for smart money traders to potentially get into trades where it's also at a support level. It's also at a resistance. It's also at an equal high. And in that case, we're seeing that they're being used as liquidity. So I learned the hard way that price does not run off of smart money concepts. Things like order blocks, things like imbalances, I cut all of that out. Did I do it quickly? No. It took several years, actually 2 years, for me to go from just smart money to smart money plus liquidity to utilizing some smart money like order blocks and imbalances to now utilizing zero smart money concepts. I don't use order blocks. I don't use imbalances. I only look at the liquidity that price is forming on a chart, and I simply try to target that. It's that simple. So what happened was this guy called ICT, and I'm sure you guys all know him. He started to really the trend of smart money. Did he make it up? I've got no idea. To be honest with you, I never and still haven't watched a single ICT video. I've heard from a lot of people that it's a lot of mess and a lot of different strategies. And then I've also heard that this guy doesn't even trade. So if he doesn't even trade, how the hell are we supposed to copy a strategy that he's created? It makes zero sense. He also blew his account on the Robbins Cup, which was a trading competition. He said he was going to win it. He ended up blowing his account 90% down. What does that tell you? The guy doesn't even trade. Anyone can make up a concept. Anyone can seem like they're running a course or whatever. They try to make you seem like they know everything that they're doing, but really in reality, they're not profitable themselves. And we're seeing this over and over again. These people often get weeded out after some time. But at the end of the day, we need to understand that if someone's teaching a strategy and they're not trading themselves or they're not profitable themselves, the strategy is not profitable. People are trying to spin the story that ICT actually, oh, no, he's not that profitable, but his concepts are so good and they work all the time. That's absolute bullshit, guys. I'm sorry to tell you. You need to change your strategy and you need to move away from that. I'm not saying don't use any smart money concepts, but to follow someone like ICT who's proven himself to be unprofitable, it's going to be a disastrous few years or longer for you if you're going to stick to that sort of strategy. One thing that we need to take note of is that the markets are always changing and the markets are always evolving. What that means is a strategy that works today might work tomorrow, it might work in a month, and it might work in a year. But in 2-3 years' time, we have no idea if it's going to work. That is why trading is so hard, because it requires so much intuition. When I'm trading, for example, There is so many times where I'm looking at the charts and I just know something's gonna happen. But it's not really something that I can teach what's about to happen, because it's just like, you just know. And that's intuition. And I think that plays a massive, massive, massive role in trading profitability. And that is why I think it takes several years to actually be profitable, because you need to build that market knowledge from looking at the same thing for so long. But bringing it back to SMC, these strategies that worked before now were being too obvious on the chart. Everyone was trading them, everyone's taking the same trade. How many people do you think wait for London Open, look for a bullish or bearish break on Euro USD and enter a buy or sell limit based on the last point of interest? Millions? I don't know. It just doesn't make sense for me to trade a strategy that everyone else is trading. So I had to look for ways to evolve. I had to look for ways to adapt. First, I would look for liquidity. So I would look for, let's say we had a bearish break, but then there was equal highs above. I would look for that to be taken out and get into a trade. And that works okay. It's hit and miss. Sometimes it goes, sometimes it doesn't. But we're looking at, price taking liquidity first, then doing a break, and then getting in a trade. But what happened? Everyone else started to trade this way too. So again, you need to sort of take a step back, realize that people are now waiting for a low or a high to be taken and then a bearish break or a bullish break to get into a trade. Where this makes a lot more sense, to be honest, a lot more sense to me. I think there's more to the puzzle here. I think there's more to understand, and it comes in the factor of understanding where support levels are, for example, understanding where resistance levels are, understanding that demand and supply zones are support and resistance. So with me knowing this and knowing smart money concepts, I would use things like break of structure and order blocks and stuff like that. Now I actually trade in the reverse, where if I have a bearish break of structure, I'm seeing that as liquidity being taken from a low, and I'm actually looking to go for a long, if I have my confirmations, into a supply zone. I want to show you what I mean on the chart, because you'll see that liquidity is everywhere. If we look at price action, this is gold. We have an hourly chart, and it's very, very simple to understand that we have a support level here. In fact, one touch, or you can call it two touch, three touch, you can call that several as well, and then price is having a move from that support level. The more time support is touched, the better chance it is that price is going to break through that. But there are times when you can look for trades and longs around a support level, and same for sells. So if we're looking at price right now, and I've got a trade that is a really good example for you here, I'll jump down into the 15. So remember that that's our support level, right? Coming into London Open, you can see that price made a lower high, and a lower low, or really just created extra support. Now price is pulled back. So I'm looking for price to come into that support. That's what I want to do. So why is a buy a valid trade to take here? Well, look at this. Now this is right on London Open, right? Keep that in mind. Bearish break, London Open for me is 9 a.m. Bearish break of structure, leaving a supply zone here. So why is it buy valid? Well, it's very, very simple that we know that there's going to be so many traders looking for sells. Again, bringing it back to smart money, but also looking at supply, demand, liquidity, which is this low being taken. So after we have that bearish break of structure, we can look for a buy into the demand zone, but look right above that. We have liquidity building up. So why a buy and not a sell when we're looking to target this area of support? The buy was because on London Open, we had a bearish break of structure, which left behind a supply zone. That left behind a supply zone, which gave us the opportunity to target that. But if we look above, we have a resistance level. So we're targeting all of this liquidity. And what has price done? It's reacted from the supply, reacted, and eventually just bursts through. We often see it do exactly this. And the reason it does this is because it tries to trap traders into a sell. So the buys are valid. However, we have a demand zone down here, which sits next to the support level. If price did not react from where it reacted from, and instead came down into here and reacted, I would then look for a sell through that support. In fact, that's what I'm doing next. Because if we look at price, it has now done a bullish break of structure. So that bullish break of structure means this demand zone is more active. Now, if that demand zone is super active, if price comes down into there, we're tapping into a demand zone that sits next to liquidity, that sits at a support level. So what I'm actually looking for there is for price to smash through that. So now that that target's been hit and we've gone to the upside, we can actually look for a sell in the other direction. Now, to actually get into a trade here, there's several ways you can do it. You can enter based on this pullback and this move. So you can actually enter quickly there. Stop loss can be wherever you want it to be. So you can enter nice and early, even off of this, but then you got to be protecting your stop loss. Enter nice and early. We have, again, equal lows that happened after that. So whether you're in or not, there's equal lows there, which is a potential entry after we get a sweep of that. And then we can look for a buy, which actually targets the opposing liquidity and the demand zone, which is exactly what we want to see from price. So as you can see, price comes into a demand, it reacts. Again, that's going to entice a lot of traders to go short, but us using that as liquidity, looking for price to take that out. We're not waiting for price to come here to get into a trade. We're trying to catch that move into the liquidity. That's the difference of how I trade and how I've seen a lot of people that like to use liquidity is that they like to see liquidity being taken first and then they get into a trade to the other side. Whereas I like to be targeting the actual liquidity, which is what this trade example shows. So as you can see, I've dramatically changed my strategy. And you could say, oh, but you use the supply, you use order blocks. No, I'm using that to see where the liquidity is and to know that people are going to be getting into trades there. If I know that people are going to be getting into a trades there, again, it could be a trend line. Great, I know people are getting into a trade. I could have a trend line that sits like this. I don't, but I could have something like this. I'm like, great, I know that that's a trend line liquidity and people are going to get into a trade there. Even this small trend line, right? You can definitely utilize that and add that into your checklist and confirmations, right? We have a small trend line build up here. We know that people are going to be getting into a trade at the trend line. So that's going to be extra liquidity. So once that's taken out, partials can be taken. Once the supply zone's taken, partials. Once the resistance, partials. Or you just hold it through and see that whole cycle play out and that whole liquidity being taken. So a lot of people are looking for here to get into a trade. And where that's not a wrong decision to make, I don't know if price is going to react and go lower. It could do something like this, a bearish break, leaving behind a supply zone, and then price decides to push up higher, and then it goes lower. Or it could do that several times, right? And then finally it drops. So there's several things we need to look for there. But based on this is why I don't use any smart money concepts at all. I don't like to look at anything, order blocks, imbalances, nothing like that. And you can see clearly that this strategy is definitely unique. It's definitely one that I've created on my own, and I use it very, very effectively every single day in the markets. Trade it on gold predominantly. I also look at euro and sometimes GBP USD, but gold for me is where the bread and butter lies because I just love how it moves and how quick it is and how it forcefully targets that liquidity. I mean, look at this. When you see price really start to go, it takes 2 minutes to come to that demand zone. And that demand zone is 30 pips to the upside. So it's not a small area of price to move. Like, your price really going to move on gold, and you're going to be often wrong quickly or right very quickly. You can go break even quickly, and you can also close your trade once you're happy with the profits. And I don't go for high RR. This could be a 3R right here if the entry is perfect. Or, there's times where I might close it here because there's a trend line, 1 to 2.3. There's times where I might close it even at a 1 to 1.5 at the least because I see maybe it's, built up liquidity and swept it. All right, whatever. I'm just going to close, take my money and move on. So this is exactly how I trade now. And this is why I've moved away from smart money concepts completely and why you probably should consider doing it too. If you do want to learn this strategy, I actually teach it for free. So join the Telegram. I'm going to put the link in the description. Once you've joined that Telegram, you can access me and message me from there. And we can teach you how to do this and how to actually take these trades for yourself. As well, I can actually give you my trade signals if you do want that too. But thanks for tuning in. If you do like this video, like, comment, subscribe, and I will see you on another one soon. Thank you so much.